Well, you know something, right? People often say this half-jokingly, but there's probably an element of truth to it, which is President Trump, to some extent, one of his own KPIs to monitor how successful he is in rolling out his policy agenda is to see how the markets are performing. So to your opening question, which is it a great time to be an investor? The answer has got to be yes, because the largest capital market in the world has a new administration in place that are very focused on the economy, on its growth, not just over a quarter or over a year, but over a longer run period, and achieving that growth in a manner that is truly benefiting the grassroots person, across the length and breadth of the United States. So, that certainly is encouraging, but even more encouraging to your other point, Neeraj. I was similarly encouraged by the fact that one of the biggest wild cards that we were all acknowledging is an uncertainty heading into the inauguration, which was tariffs and the impact on, in particular, the trajectory of inflation and interest rates as a second-order effect. Where will the administration come out on day one? And the fact that President Trump, stated, a very prudent point of view, thoughtful, which is, look, we need to assess, we need to investigate, we need to analyze, we need to evaluate. And based on that, we will decide what we need to do. And it probably also signals, therefore, that's not going to be a one-size-fits-all, right? I'm not in the camp of assuming that just because no tariffs were announced yesterday, we are done. That's not the case. That would be naive.
Yeah.
But I am encouraged by the fact that there is a degree of prudence, seems to have been embedded into the administration's policy agenda.
Okay. So what is it? So for a large global investing firm, what does it mean for investing in the US? Because it's been 2 years of US, as you use the term, exceptionalism, right? Do we see a year 3, or will 2025 be different? 1, from a perspective of investing in the US, and 2, from a perspective of investing across the rest of the world?
I think that's a great question, Neeraj. So, first of all, I think the baseline expectation has got to be one of continued US exceptionalism.
Okay.
Not just because of the change in administration and their views towards making the US a more business-friendly destination for capital investment, but also because of the significant lead that the US has in the field of technology, specifically technology, but also energy. As President Trump pointed out, they are sitting on huge reserves of energy. They can actually be a low-cost producer of energy and benefit their manufacturing sector accordingly and so on. So, the way I think about this is it's a macro and a micro assessment. From a macro perspective, acknowledging that U.S. exceptionalism is likely to continue in 2025, clearly the U.S. is a macro tailwind. There are 2 other markets with a similar macro tailwind. One that you and I are both very close to, being India. I think for understandable reasons, we can get into that. And the second is the Middle East, the GCC in particular, which we can also do a double click on. 2 other markets that are not benefiting from macro tailwinds, but do present some very interesting idiosyncratic micro investment opportunities, whether in select countries or sectors or even individual companies, are Europe. Because it's not a one size fits all in Europe. In fact, Europe has a headwind, right? But select sectors in Europe, select companies in Europe, select countries in Europe, we would definitely, and we are investing in select asset classes. And the second is China. China is the second largest market in the world, right? Whatever we say about China in terms of slowing economic growth, et cetera, there are pockets, in China where they have unquestioned leadership, right? Including, clean tech, right? Climate tech. So China offers, in certain domains, a very attractive risk reward, but very selective.
Yeah, I was going to come to that too. By the way, Europe, it surprised me when I looked at the stats about how well has Greece, has Spain, etc. done in 2024. We forget that it's not just Argentina or some other markets, but even some of the European markets which have done well. So quite exceptional, really. But China, Rishi, the larger view seems to be that people go in and eventually burn their hands and come out unless you know China very well and know what to pick within China. So it's not buying China as a market, but buying specific pockets in China.
And, in addition to, looking at the right pockets of investing activity in China in particular, it is most important to align yourself with a local partner. Okay. Right? It's not enough to go in as a foreign firm and just hire people from within China just because they happen to be China. What is, I think, more impactful in a good way is genuine partnership with Chinese institutions that are not just plugged into the ecosystem, but have a clear following, and understanding of the local market, the flows, the sentiment. That is to some extent for a foreign firm hard to discern, right? I mean, we entered India, as you recall, with a very similar mindset. We said just because a few of us happen to be of Indian origin, that doesn't mean that we understand the Indian market. Yeah. That's why our entire team in India is local, right? They grew up there. Their entire investment experience base is there. They know the entire ecosystem of stakeholders, whether it's promoters, owners, investors, the accounting firms, the lawyers, etc. And that really helps. Same thing, you need to be able to replicate in China. And the most expedient way to replicate it is through partnership with a local firm. That's what we did. We partnered with China Resources Group, we partnered with China Everbright, but most importantly, recently, we partnered with CIC, with the largest, wealth fund out of China.
So knowing Trump, it's no surprise that he's the most. If anything, he's the most uncertain person, right? So he can do anything, anytime. So that's his nature and that's his style and that's what he thrives on, right? So that's one. But talking about what impact he could have on India, so I'm not sure because I don't think India has at least my industries are not dependent on the exports to the United States, and therefore I don't see much of an impact that my group will have if there were more tariffs from the U.S. We don't export anything to the U.S. Right. Whereas we have businesses in U.S. which will benefit from tariffs because the U.S. prices will go up and hopefully that will benefit our business in the U.S.
Sure. But sir, you're a large captain of India Inc., so to say. From that chair, not from a JSW chair, how do you view this impacting Indian businesses, or do you believe that it could actually help them thrive simply because it could enhance the China Plus One story even more?
Yeah, so given the uncertainty of Trump administration's decisions, if at all, it will help India, in my view, because India is a friend. He considers India a friend. And he's very against China, but he could change that as well. You never know him. But whatever I know of him, he's not very friendly with China. And today China is selling all the products into the U.S. And any restriction that he will bring on Chinese goods will help China Plus One or China, one minus China.
Got it. Okay. And speaking of China, and I also want to come to this whole concept of globalized organizations, WTO, etc. I believe you have some thoughts there. But before that, just a view on what China is doing, can do, and cannot do, and the impact on various industries, including the commodity industry, because it has far-reaching implications on what commodity prices do. Right? What are your thoughts, Mr. Jindal, on that?
No, so let's understand China. China has got a huge capacity built up in their country over the last 20, 25, 30 years. China is become the factory of the world. On the commodity side also, they produce over 50% of steel, over 50% of zinc, over 50% of copper. So you name it, and they have over 50% of the world capacity lying in China. Now China is obviously slowing down, and they are not consuming all that what they're producing. So what they're doing is that they are trying to capture other markets in the world and trying to export those surpluses that they have. And when they want to export, then they are doing it at marginal cost or below marginal cost. Therefore, what it is doing is that the countries like India, which has to build new capacity, is not able to compete. And the industry in India will not make money, and therefore they will not be able to invest to rebuild or to build more capacity. and we will then perpetually depend on Chinese imports. So that's what our government, they don't want it, and neither the domestic industry want it. So therefore, we have to have some protection from China and the products which gets circumvented. The Chinese products comes through other countries into India. So that the government has to be smart and has to protect.
I'm sure you have the government's ears, right? So in some sense, Mr. Jindal, I mean, is there a political reason or an international reason why some of these tariffs, which seem obvious to so many people, can't be levied in the shape and form that people believe is the right way to do?
So yeah, there are a couple of reasons. One is that the government is bound by the World WTO rules, and so therefore they just don't want to dismantle that whole system. They are working to find ways and means how to manage within the WTO guidelines and stuff like that. That is one. Second thing is that there is a thought process within the government that the small scale industry or MSMEs, they will get more expensive commodities. If we block China, or if we reduce, or if we put tariffs, this domestic prices will go up, so they think that they will get hurt. But in reality, that won't happen because there is enough competition within India. But I'm only saying that when there is an unfair competition, so that needs to be looked into by the government. And there are various methods, various things which government can address, through which government can address.
There's some mention this morning, CET time, about China trying to do some bit of stimulus measures. Now, the balance sheet of that country is a bit of a black box. You never know what it can or cannot afford. What's your best estimate or guesstimate, sir, about how much can China stimulate and the implications thereof for even your industries?
So China keeps coming out with their stimulus. If you have observed China over the last 2, 3, 4 years, whenever there is a slowdown or whenever there is a problem, they come out with a stimulus and try to revive their industry. So I think I won't be surprised if they come up with another stimulus to revive their industry, because their inflation is very much in control, and their currency they keep depreciating to handle the exports. So therefore, I don't see them to not provide the stimulus.
Okay, because if they don't do that, then it results in fears of more dumping of a lot of goods, which might not be something that industry in India would like per se.
Yeah, that's true, but we should not really depend on what China does. We have to move into a situation where we have to take our own thing in our own hands. We have to, put like what the US is doing. They are putting tariffs. What Europe is doing, they're putting quotas and tariffs. Why can't we do it? We are a big manufacturing industry. If we are serious about our manufacturing base to increase to 25%, then we have to protect our industry and let the industry grow to that stage where it can, take head-on the Chinese onslaught.
Got it, sir. Okay, a few questions on the group as well. I mean, let me start with, your plans for steel, ambitious, well-known. You reckon, independent of what happens in China, the global demand and Indian demand would lead you to meet the targets that you set out for yourself? There's a lot of talk also about how at the peak of the cycle, steel companies tend to announce expansions only for them not to meet at a later stage. Would just love your thoughts there.
Yeah. No, so we have announced that by the turn of the decade, by 2030-31, we will be a 50 million ton steel company. Now, at the moment, as we speak, we are 35 million tons. So that expansion will happen. I don't think there is any roadblocks to that expansion, because this is all brownfield expansion, all lined up, everything. But I would like to see JSW Steel grow faster than that, and that calls for support from the government in not allowing Chinese steel to be directly or indirectly dumped into India. That's it. That's what we need.